We just laid out some of the issues with New York Community Bank. I want to ask you, are you concerned about financials possibly creating a situation where there's contagion to the rest of the market?
Well, this is a problem that we knew was in the offing. And the truth is that regional banks are disproportionately exposed to commercial real estate. We haven't seen this credit cycle yet play out. But the truth is that over the course of the next year, about $560 billion in commercial real estate loans are coming to maturity. So we should expect some stress on the regional banks here and there, but I wouldn't expect a financial crisis. I think this basically really shakes confidence.
Yeah, I think Janet Yellen trying to assure investors. We heard Jay Powell say the same thing. He said some may merge, some may shut down, but he believes the financial sector is pretty strong.
Right.
I want to talk to you about the markets.
Yes.
Okay. You gave us your S&P price target. You're going to have to explain this one to me. Your S&P price target's 5,000.
Yes, flat.
That's like a 0.5% rise from where we are right now. At the same time, you think yields are going to go down on the benchmark, the 10-year, to 3.75. So why are the markets only moving sideways with lower yields?
Well, I think it's about economic growth. So I have growth decelerating here in the U.S. in terms of real GDP from about 2.6 or 3% last year. Remember, potential growth in the United States is about 1.8. I have it decelerating very strongly to 1% real GDP growth this year. So under that scenario, the Fed likely cuts about 100 basis points. I see the 10-year Treasury at 3.75. But I think the market does trade flat, and I think that the markets currently are discounting certainty when there's elevated uncertainty. I think there's tail risks here that are very fat in their nature.
Okay, so you think there's some uncertainty going forward. Obviously the Fed has a big impact on the markets. You think there's 100 basis points of cuts, but that doesn't give a broader boost to some sectors of the market that have been lagging? That's the part that I think I'm a little bit confused about.
Well, look, if 2024 turns out to be a repeat of 2023 and economic growth dominates, then we should expect the S&P to break out.
Okay.
And I'm talking big breakout.
Big breakout?
15% out.
But you don't think that's going to happen?
But the Fed doesn't cut 100 basis points under that scenario. Same as last year. Beginning of last year, remember that we were expecting 75 basis points in cuts. Didn't happen. Didn't matter.
Okay.
And it didn't matter because the economy grew 2.6 to 3%. Same thing repeats this year, and we get immaculate disinflation. Then I think we get an upside breakout. But if that doesn't occur, I think economic growth decelerates. I have a recession risk of 40%. That's double consensus. Then I think I don't think that tech continues to lead the way, and I prefer defensive sectors like utilities and staples, healthcare and energy.
All right, recession risk at 40%, you're saying? Wow,
yes.
That's a big contrarian.
Yes, it is.